Hello there, welcome back to another video in this business planning series. This is your ultimate guide to creating a business plan. In the previous video, I went through projected profit and loss statements. In this video, I'm moving on to projected balance sheets. The balance sheet lists a company's assets, liabilities, and equity. It basically shows what a company owns and what a company owes. In order to create a balance sheet, you need everything completed to this point. That includes sales forecasts, expenses forecasts. You need to know payment terms that you're going to agree with customers and suppliers. You need asset forecasts, liability forecasts. You need the cash flow forecast, projected profit and loss statement, because all of this is used to create a balance sheet. So if you've joined the series here, then go back and watch from the beginning, and I'll take you through the whole process step by step. So here are the projected profit and loss statements that we created in the previous video. You can now see we are on sheet 8, the last sheet in this series. So I'm going to call it, or name it, balance sheet. And here we go. So A2 right at the top. Once again, I'm going to put that business name, the Bookkeeping Master, just like I have with all the other templates in this series. I'm going to make it bold and underline it. And underneath, projected balance sheet year 1. So it looks just the same as all these other templates where we have the name of the business and then the title of the document underneath that heading. I'm now going to go to A7 and we're going to make a heading for assets. I'll make that bold and underline that. Going down to A9, cash, trade debtors. So this is money owed from customers. Customers we have credit terms with, trade debtors, and other assets. Now going down all the way to A17, liabilities, that's another heading. Trade creditors, so this is money we owe to suppliers, other liabilities, or you could put other creditors, other liabilities. And then A25, equity, that's another heading. We can make that bold and underline that. Share capital, that's the amount purchased for company shares. If it's not a incorporated company, if it's not a limited company, there will be no share capital. Shareholder equity, once again, this is very specific to limited companies, incorporations. And then profit and loss reserve. So basically we're just listing the assets, the liabilities and equity of the business or company. Now, as mentioned in previous videos, if you have no accounting background at all, no finance background, then the balance sheet might just go over your head. It might be that you do need an accountant at this point, or with other areas of the balance sheet, you might just need some help. And I do offer business planning services if you do need that help. So D6, let's put our currency symbol and then highlight that column. I will center that, and that's it. So we need to bring totals across from the other templates we've created. So what is the cash balance? What's the available cash balance going to be at the end of year 1? Well, it's going to equal the cash flow forecast, the closing balance at the end of year 1. So this is available cash in the business at the end of year 1. So let's just equal that and it will bring it across. What's trade debtors going to be? Well, if we go to the sales forecast, this forecasts sales for each month, for each year. If you've been watching this series from the beginning, you'll know that we talked about payment terms when I created this sales forecast. And we mentioned that you could have 30-day payment terms, 15-day payment terms. So what you need to do with your balance sheet is you need to select the right month or months that would not have been paid yet. sales that have been invoiced but not paid yet. For the purpose of this video, let's just say it's month 11 and month 12. So enter that. So now we have the amount, projected forecast amount, that customers are going to owe us at the end of year 1. Other assets is simply from our asset forecast, and it's the closing balance at year 1 on the asset forecast. That's assets purchased minus the depreciation gives us our closing balance, and that is our assets done. So in A15 I'm going to do equals sum, SUM, open a bracket, highlight these and then close the bracket. So I'm simply just totaling the assets up here. Now what I want to do actually is format these cells because I don't want decimal places to show. There we go. Okay, we can format the total here. So right click, format cells, go to border. We can put a nice big border here. That's a bit too thick. Let's try that again. So border. Okay, so this figure really stands out. We can make it bold as well. So that's our asset total. Now the great thing about a balance sheet is that the asset total should equal the total, the liabilities and the equity. That's one of the accounting equations that accountants use fairly regularly, is that assets should equal liabilities and equity. That's why it's called a balance sheet, because this figure should balance with these figures down here. So our liabilities, trade creditors, just like trade debtors, we need to know payment terms. Let's do equals and go to the expense forecast. It's going to be a month or half a month or a couple of months depending what the payment terms are, and it all could be mix and match. Some of this could be 15 days, some of it could be cash on hand like instant payments, some of it might be 30 days, 60 days, so you really need to look into this closely. I'm just demonstrating this. I'm going quite quickly and just making it up as I go along. Really, you really need to think about what the payment terms are going to be. Let's just say for this example it's month 12, so that last month will be outstanding for payment at the end of year 1. Other liabilities, this is not automated because nowhere in this business plan have we actually listed liabilities for the company. We did a liabilities forecast where we forecast repayments and interest, but nowhere have we actually listed what is going to be borrowed and what needs to be paid back. So you have to enter that in yourself, or you could be very clever and create some sort of other tab that will list liabilities and the closing balance of those liabilities at year end, and then bring it across. That way it will be fully automated. So let's just put something in here. Let's just say it's going to be 25,000. D23, we can do equals sum, open our bracket, just to sum up the liabilities. And we don't need a big border here, and we don't need to make it bold, simply because we're not interested in the liability total. We're interested in the asset total and the liability plus equity total. Share capital, once again, this is not going to be automated. You'll have to put the figure in depending on what the share capital is going to be. Profit and loss reserve is going to be the profit from year 1, so equals projected net profit. But in reality, you'll also have to minus dividends, any dividends paid out. So that's profit shared to shareholders or distributed to shareholders will come off this amount. So as an example, let's say 10,000 we forecast will be paid to shareholders by the end of year 1. That will give you the remaining profit and loss for the profit and loss reserve. And shareholder equity, this is money owed back to shareholders, people that have put money into the business as an investment that can be paid back at any time. So let's just say it's 7274. It's equal sum, open bracket, the equity here, and then we can do a top and a bottom border by using the borders option up here. And then we need a final total down the bottom, D33, which is going to equal our liabilities plus our equity. And if everything has been done correctly, then assets should equal the total of liabilities and equity, and the balance sheet will balance. That's what we want. Let's just put some borders in here, and that's our balance sheet. Now down the bottom here we can create an area for notes. So in A35 we can create notes, underline that, and we have some space here to write some notes about the balance sheet. And there we have it. I've gone through this very quickly, but we are coming to the end of this business planning series. If you've joined the video here, it would have been far too quick for you to follow, but if you have been watching from the beginning, it should be much easier for you to follow along and understand what is going on, because I'm simply just repeating what's been done in previous videos. So let's try that again. Okay, so I'm just pasting. I've copied all of it, I've pasted into F. I'm now going to paste into K. We can change the titles to year 2 and year 3, just like I did in previous videos. And then these formulas will need changing. We need to grab the year 2 cash balance, which is here, and just go through and complete the rest of the formulas by bringing across the correct totals.
Trade debtors for 30 year 2. Other assets for 30 year 2. So the total amount here. Trade creditors, that's the expenses of the year 2. Other liabilities, we need to manually put this in. Share capital will remain the same. Profit and loss reserve, so let's do equals profit, this, plus this, and then we need to minus any dividends. Let's just say from the shareholder equity has been paid back to 4739. So again, in year 3, it's going to be the cash from year 3. Trade debtors from year 3. Once again, taking consideration of payment terms, asset closing balance. That is going to be expenses forecast. Other liabilities is going to be put in. Share capital will always remain the same unless more shares are issued. Profit and loss reserve is profit plus profit plus profit, minus any dividends paid out. And then shareholder equity, we just need to adjust that to what is now owed to the shareholders.
And there we have it, a 3-year projected balance sheet. Once again, it's not going to be easy if you have no accounting background or experience. In the next video, I'll go through the written side of the business plan. Thank you so much for watching to this point. If this series has been helpful whatsoever, please like, please subscribe, please feel free to share this. It's all for free. Thank you so much for watching and for the support, and I will speak to you in the last video.